Hello, thank you very much for joining us once again and welcome back. We are discussing today taxable persons, tax applicable on it, and related to the tax period, when they need to file the return, what is the timeline to submit the return, and these all things we are discussing today. For a taxable person, we have already spoken so many times, but still we'll go through this quickly. Objective and core focus will be on the tax period and related when you are liable to submit the return, because a lot of two public clarification has been issued on it and one FTR decision has been issued on it as well. So we're looking into this detail. So these are the previous webinars that we have conducted as of today. 77 webinars we have already conducted as of today. Taxable persons. A taxable person is any person that is subject to corporate tax under the UAE Corporate Tax law. And these persons can be juridical person, these persons can be natural person, this taxable person can be a qualifying free zone person, it can be a non-qualifying free zone person as well. If the person is a qualifying free zone person, we know this, that the 0% corporate tax is applicable on the qualifying income and a 9% tax is applicable straightforward on the non-qualifying income. Where the person is a non-qualifying free zone person, where the person is a non-qualifying free zone person, 0% tax is applicable on the taxable income up to 375,000. Beyond that, tax is 9%. The persons can be, as I mentioned, it can be juridical persons, it can be natural persons. Juridical persons are the persons which are incorporated, firm, recognized in the UAE. These are not the natural person, these are not the unincorporated partnership, these are the legal entities and registered as a juridical person other than this natural person. So natural person, we know this, these are the transparent, these are the unincorporated partnership individuals who are doing business in the UAE. There no difference in between the individual and the natural person. And the natural person having a business income of up to 1 million, this business income includes all sorts of income, even income from the sale proceeds from the sale of the assets as well. And from all businesses, if their total sale proceeds is not more than 1 million in a Gregorian calendar year, then we can say the natural person is not subject to corporate tax. I'm going through this quickly because we have already discussed these things many times. I have presented this slide. I am going to present it one more time. The person, it can be exempt person, it can be out of scope person, it can be taxable person. Taxable can be resident taxable person, it can be non-resident taxable person as well. When I'm asking resident taxable person, these are the companies which are incorporated in the UAE and their worldwide income is subject to tax. Non-resident juridical person, there is a possibility that there are companies which are incorporated out of the UAE, but these companies are being controlled and managed from the UAE, then it will be considered a resident person for UAE corporate tax purposes. There can be natural person as well. Natural person, as I mentioned earlier, is an unincorporated partnership. It can be legal entity, but these are the juridical persons. So these are called natural person. If the natural person are doing any business in the UAE, any income related to that business will be subject to tax in the UAE. Then we discuss non-resident person. Non-resident person, it can be PE of the non-resident person in the UAE. Income attributable to the PE subject to tax in the UAE. The UAE sourced income, if someone is driving UAE sourced income, it will be subject to 0% withholding tax. And if someone has any nexus in the UAE, like they have any investment in the residential in the property, then they will be liable to register in the UAE other than they are investing in their personal capacity. They are generating income, and then they will not be. Otherwise, if they are doing any business related investment in the company, if there is any company, that company has investment in the property in the UAE, the company will be liable to register in the UAE. Or if there is a natural person, that natural person is doing business by sitting out of the UAE, but doing business, like they have taken different natural person sitting somewhere across the globe, but that person has taken multiple buildings on rent. They are giving them buildings on lease. There is a possibility, if this is the case, then natural person is mean they will in access in the UAE, they need to get themselves registered in the UAE as well. So this we have already discussed in a taxability discuss. Now this is resident. We discuss resident tax resident versus non-resident person, resident person, natural person, company or juridical person incorporated in the UAE, foreign person that is being controlled and managed in the UAE, the resident person as I mentioned, non-resident person, PE of the non-resident person, state source income, and anyone nexus in the UAE is called non-resident person. If I'm asking about specific taxability, tax on the taxable persons, this is a very comprehensive slide that give me understanding what the tax applicable on the taxable person. This taxable person can be a resident taxable person, it can be non-resident taxable person. Is resident might be a natural person, might be a juridical person. If this is a natural person, it can be sole establishment, civil company, freelancer. These are the natural person. As we discussed, natural person having a business income up to 1 million, they are not subject to corporate tax. Annual business income up to 1 million to 3 million, liable to register, they are liable to submit the return as well. If their case, they are opting for the small business relief, they can opt it and they will not be subject to corporate tax till 31st December 2026, but still they will be liable to register. They are subject to corporate tax, but they will not be liable to pay any corporate tax because they have claimed exemption. If this is a small business, revenue is in between 1 million to 3 million and they have not opted for the small business leave, then up to 375,000, 0% corporate tax. Beyond that, 9% corporate tax will be applicable. This 375 is the taxable income. Means we need to map the accounting income into taxable income, then we need to apply the taxes. If the annual business income is more than 3 million, they cannot opt for the small business relief. Treatment will be same up to 375,000, 0% corporate tax. Beyond that, 9% under taxable income. This is a natural person. Now coming back to the juridical taxable person. If these are the juridical taxable person, these juridical taxable persons can be LLP, LLC, public joint stock company, and annual business income is up to 1 million or more than, sorry, up to 3 million and more than 3 million. Just note here, this 1 million exemption is only available to the natural person. This 1 million exemption is not available to the juridical person. Juridical person, as we discussed so many times, it doesn't matter you have zero income, zero transaction, dormant company, millions of transactions. It doesn't matter whatever is your status. Important thing is, do you have a license in your hand or not? If you have the license in your hand, this is even you are under the liquidation process, still you are liable to register. And once you are liable to register, then these provisions of the law will be applicable. If your annual business income is up to 3 million or more than 3 million, if 3 million up to 3 million, you can opt for the small business relief. If you are not opting, then treatment will be same as given here. There's no difference. Then if your annual business income is more than 3 million, you are liable to register and submit the return incorporated in the free zone person, incorporated out of the free zone person. If incorporated in the free zone, this is again important thing that only these free zone person can be a qualifying free zone person. Because you can see here when I mentioned this incorporated out of the free zone, I have not given mention here the qualifying free zone person. Means only if the juridical persons are incorporated in the free zone, they can become qualifying free zone person. Otherwise, no one can become a qualifying free zone person. So if they are qualifying free zone person dealing with the other free zone person, then this is the accept the excluded activity 0%, non-qualifying income straightforward subject to tax and 9%. Dealing with the non-free zone person, then qualifying activities will be 0%, non-qualifying income it will be straightforward 9%. We are assuming that the qualifying free zone person is meeting all 6 conditions which is applicable to the qualifying free zone person to remain as a qualifying free zone person. If they are not meeting the condition, their qualifying free zone person status will be burst. They will come out of the qualifying free zone person and they will be subject to tax and they will not be able to become a qualifying free zone person again for the next 5 years. So if this a juridical person and this is the annual business income is more than 3 million, they are not incorporated in the free zone, means they are incorporated, they are incorporated out of the free zone. they are incorporated in the free zone, but they are not meeting the conditions. So there is a possibility they incorporated on the mainland or in the free zone, we are not meeting the condition. Treatment is the same. Up to 375,000, 0% corporate tax will be applicable. Beyond that, the income will be subject to tax at 9%. So non-resident taxable person can be three possibilities. Non-resident taxable person, it can be PE of the non-resident person, PE of the non-resident person, UAE sourced income or nexus in the UAE. If the PE in the PE of the non-resident person is in the UAE, we know this PE, it can be in the form of branch, it can be office, it can be dependent agent, it can be any construction site having a life more than at least period for 6 months. So the various options are there, various conditions have been given there. Then if they become a fixed establishment in the UAE, they'll become a PE of the non-resident person in the UAE. There is a possibility one dependent agent is there, agent is exclusively working for the non-resident person, it will become a PE of the non-resident person. So income attributable to the PE will be subject to tax in the UAE. It will be treated like a juridical person. This important thing is when I'm asking juridical persons, it will be falling here. Means PE of the non-resident person can become a qualifying free zone person as well. But this PE cannot enjoy up to 1 million relief because it will be treated like a juridical person. Having a source in the UAE, if someone is generating an income from the UAE, so in sourcing income from the UAE, 0% withholding tax will be applicable on their income. A supplier will be deducting 0% and supplier will be reporting in their return. Might be this rate will go up with the passage of time. If someone annexes in the property in the UAE, as we discussed, they will be liable to register in UAE. Once they are liable to register, they will be liable to submit the return. And there is a possibility if someone is working as a natural person or juridical person. Natural person, they will be falling here, or juridical person, they will be falling here. Important thing is when I'm asking natural person means if this natural person has investment in the multiple property, they are using the properties for business purpose, it will be considered nexus in the UAE. And if there's someone is sitting out of the UAE, they have only investment in the property in UAE, but they are not doing the business. They are merely investment in the property to generate the rental income. It will be considered the personal income. It will not be subject to corporate tax. So if they have an access in the UAE, they need to get themselves registered in the UAE. Once they are getting themselves registered in the UAE, then all provisions of the corporate tax law will be applicable to them. So this is basically how we have concluded tax and tax applicable on the taxable persons. So what we have understood till now, basically we are repeating what we have understood till now, what we have learned till now. We learned taxable person, it can be resident, it can be non-resident. Then we discuss what are the persons which are resident taxable person, then what are non-resident taxable person. We discuss juridical persons, then we discuss natural person. Then discuss tax applicable on the natural person, tax is applicable on the juridical persons, qualifying free zone person, then non-resident taxable person. All these things, this is just basically recapping. We have already discussed so many times these things, but still I just because this is relevant with the qualifying free zone person slide as well, so I decided to discuss this. So tax period, important topic. What is the tax period? What the law says? First of all, we need to go through the law. Definition says the period for which a tax person is required to file a tax return is required to be filed. Period for which a tax return required to be filed, this is called a tax period. This is a definition. Then Article 48 of the law says, what the Article 48 of the law says, a taxable person must settle the corporate tax payable under the decree law within 9 months from end of the relevant tax period or any other such date determined by the authority. 9 months from the end of the relevant tax period, but we need to know what is the relevant tax period. So return needs to be submitted within 9 months from the end of the relevant tax period. Then we need to make the payment within 9 months from the end of the relevant tax period as well. The Article 53, one of the laws is the taxable person must file a tax return as applicable to the authority in the form and manner prescribed by the authority no later than 9 months from the end of the relevant tax period or any other such date as directed by the authority. End of the relevant tax period or any other date as directed by the authority. Important. Because next public clarification that I'm going to discuss, an FTA decision that we're going to discuss, this all depends upon this two, three words basically. Or any other, or by such any other date as directed by the authority. So Article 57 of the law says, what the Article 57 of the law says, a taxable person period is a financial year or part thereof. Financial year or part thereof. Financial year or part thereof, for which a tax return is required to be filed. Financial year or part thereof. Important. For the purpose of this Decree Law 47 of 2023, I think, right? 47 of 2023. The financial year of a taxable person shall be the Gregorian calendar year or 12 months period for which the taxable person prepares the financial statement. Calendar year or 12 months period for which the person prepares the financial statement. This is their financial year. Financial year of a taxable person shall be the Gregorian calendar year or 12 months period for which the person prepares the financial year. Then the law said taxable person tax period is the financial year or part thereof. So this tax period depends upon the financial year. This tax period depends upon the financial year. Financial year can be period of 12 months. It can be more than 12 months. It can be less than 12 months as well, because we need to look into the commercial law. We'll discuss this. So crux is financial year. It can be period of 12 months. It can be period less than 12 months. It can be period more than 12 months. Tax period based upon the financial year. But you can change your tax period as well. There are various reasons for this that we'll be discussing today. So tax period is the financial year or part thereof for which a tax return is required to be filed with the FTA. And usually it's 9 months. Tax period is usually of 12 months. Within 12 months from the end of the relevant tax period, we need to file the return within 9 months. So important thing is why this public clarification has been issued. The reason for this clarification, public clarification number 3, law is starting from 1st of June 2023. This is the effective date of the corporate tax law. Might be there is a possibility that the company has been set up after this date or before this date. Yes, might be there is a possibility that the resident juridical person, this company, this juridical person, there is a possibility this company has been set up before this or after this. If this company has been set up before the 1st of June 2023, now the possibility is might be their financial period is ending on 1st June, 31st July, 1st of August, or any other period after that. So what the law says, law is effective starting from 1st of June from the financial year starting from 1st on or after, from the financial year starting on or after 1st of June 2023. I'm repeating. This corporate tax law is applicable to the businesses starting from the financial year, effective from effective from the financial year starting on or after 1st of June 2023. If company has been set up before 1st of June, so after 1st of June, whenever their financial period will come to an end, the next financial period will be started. Assuming if their financial period is ending on 30th of June, and new financial year or financial year is starting from 1st of July, then law will be applicable from 1st of July 2023. If their financial period is ending on 31st of July 2023 and new financial period will be started from 1st of August 2023, then the law will be applicable starting from 1st of August 2024. Sorry, 23. So basically, whenever the running financial period will end after 1st of June 2023 and the new financial period will be started, then the law will be applicable on the tax. Then from there onwards, From there onward, the next 12 months will be their financial period, and next 12 months most probably will be their tax period. So if this means if the financial period is ending after the effective date of the law, which is 1st of June 2023, then the next 12 months from the end of the financial period, from the beginning of the fresh financial period, will be of 12 months, then tax period will be of 12 months. This is a straightforward case. This the business was set up before 1st of June 2023. And if the business was set up after 1st of June 2023, assuming the business has been set up 15th of June or 15th of July or 31st of August. So whenever this business is set up, might be there is a possibility they have their financial period 6 to first financial period 6 to 18 months. Because why 6 to 18 months? UAE commercial law says the new company first financial period, they can have their first financial period in between 6 to 18 months. UAE company can have their first financial period. If you are setting up a company, doesn't matter you are setting up a company in the free zone, it doesn't matter you are setting up a company in the mainland. Whenever you are setting up a new company, their first financial period, as per the company law, it can be, as per the commercial law company law, it can be a period of in between 6 to 18 months. And what the corporate tax law says? Corporate tax law says your tax period can be in between 6 to 18 months. So when their tax period is in between 6 to 18 months as per the commercial law, and their tax period 6 to 18 months as per the UAE corporate tax law, it means both are on the same page. Law, what is the requirement of the company law, what is the requirement of the tax law, the requirement is same. Once the requirement is same, means both of the parties will be following the same period. Most probably, what is the financial period, same will be the tax period. So anyway, let's discuss this. Why this public clarification has been issued. First is this juridical person which are subject to commercial company law. Second is juridical persons which are incorporated out of the UAE, but these are being controlled and managed from the UAE. And third is PE of the non-resident person. When I'm asking the company which are subject to commercial law in the UAE, I've already told you we need to look into this. This company was set up before or after. The treatment is same for the company law and tax law. Company law says first financial year can be in between 6 to 18 months effective from the date of the establishment. Once this company was established, then subsequent will be 12 months period. This is the company law. What the tax law says? Tax law says the first tax period it can be in between 6 to 18 months effective from the first day of the financial year starting on or after 1st of June 2023, and subsequent tax period can be 12 months. This is for the new company, basically new company. This is for the running company. This is for the new company. This is for the running company. Means both of the law requirement is same for the company law as well as for the tax law. So as I mentioned earlier, when we're deciding this, the resident person incorporated in the UAE, when you are looking into the tax period, incorporated on or after 1st of June 2023, incorporated before 1st of June 2023. If the company is being incorporated on or after 1st of June 2023, and as per the commercial law, their first financial year can be in between 6 to 18 months. And the same is the requirement for the tax law as well. So first day of the financial year starting on or after 1st of June, July, it will be the start of the financial year. It will be the start of the tax period as well. Starting from the date of the incorporation, period can be 16 to 18 months. This is very straightforward and very clear. Now, if the company was incorporated before 1st of June 2023, if the company was incorporated before 1st of June 2023, first day of the financial year starting on or after, this requirement is same, by the way. This and this. This requirement is same because tax law is applicable for the financial period starting on or after 1st of June 2023. Now, if this financial period should be less to 16 to 18 months, and tax period can be 16 to 18 months as well. So now, as I mentioned, if the company has been incorporated, assuming on before the incorporation, before the effective date of this law, and once the financial period will be over and new financial period will be started, the corporate tax will be applicable from the start of the new financial period. So anyway, this is again, this is not anything we will need to discuss. It's very straightforward, very clear. Once the previous period will be ended, new period will be started. Corporate tax law will be applicable from the start of the new period. So means most of the cases, every time their tax period will be for 12 months, because this is the running companies. When they entered into the tax era, the time their previous tax financial period is running, it will not be subject to corporate tax. At the time the new period will be started, it will be the second period, subsequent year for the new company. And their subsequent year means second, third, fourth year, other than the first year, the period will be of 12 months. Once that period will be of 12 months, the same period will be for their tax period as well. So most of the cases here, the tax period will be of 12 months. Here, most of the cases, the tax period will not be 12 months. It can be more than or less than 12 months. This is all depends how they are basically when this company was set up and when are they are closing. It means if the company was set up, assuming 15th of June, effective date of the law is 1st of June, and they are ending their year by 31st of December, means their period will be 6.5 months. First, it will be 6.5 months. Then after that, it will be 12 months. So again, it all depends. Here, the possibility, the tax period will be in between 6 to 18 months. This is the possibility. Every time the tax period will be of 12 months. Now, this tax period, as I mentioned earlier, it can be changed as well. And whenever you can make, once you can change this tax period, means it can go up to 18 months. It can be reduced to 6 months. What can be the reasons for this? It has been written in the decision. The taxable person means if the person is being liquidated, you can change your tax period. Aligning the taxable person's period, financial year and tax period, you are aligning it. If this, you can change it as well. Are there any economic, commercial or legal reason due to this, you can change your tax period. For this purpose, you need to make an application to the FTA. When can we make an application? You can make an application before the submission of the return of that period, and maximum within the 6 months, maximum within the 6 month lapse of end of the original tax period. Means you need to submit the return maximum within 9 months. And within the 6 months from the end of the relevant tax period, you can apply, you can change your tax period. It all depends upon the authority, might be they are proven, might be they are not proven. But the conditions are you are not submitted the return and you are making application within 6 months from the end of the relevant tax period. You have the proper justification like liquidation is there. You wanted to align your tax period with the financial period. Are there any commercial, economic, or legal reasons are there? You can change your tax period. Some things we need to be very careful. This is basically, okay, let's go through this quickly, then we'll go to what I'm going. The commercial company, we've already discussed what are the commercial company, public joint stock company, limited liability company, public joint stock company, private joint stock company, foreign incorporated company. These are the commercial company. First year, we have already discussed, it can be 12 months, less than 12 months, more than 12 months, in between 6 to 18 months. Then share mukharama financial year, what the company law says, what is the commercial law says, what is the company law says, both are on the same page. The financial year and the tax period should be in between 6 to 18 months. And this company law will prevail. Then first tax period, the financial year will be the tax period for the where for taxable person, commercial law will shall be accepted. This is written in the law as well. Basically, what is your financial period? This is the most of the cases it will be same. It will be your tax period unless and until you are applying to the FTA, you're taking approval, then your tax period will be different from the financial period. This is important. That was pro rata basis. If your financial period is 6-7 months and your tax period is 6-7 months as well, so will you be able to take the proportionate numbers? This is the question. Like 375,000. We know this 0% corporate tax is applicable for your taxable income up to 375,000. Can you apply 0% tax? Yes. So if your tax period is for 7 months, can you proportionate it? Like 7 by 12, can you do this 7 by 12? Can you do this? Law said no. Most of the cases you can't do this, but one exceptional case is there. So these are the cases where you cannot proportionate your numbers. You cannot apply the numbers on a pro rata basis. What are those cases? Taxable income, it will always be 375,000. It doesn't matter. It doesn't matter your tax period is 6 months or 1 year or 18 months. It doesn't matter. It will always be 375,000. Small business relief, it can only be applied if you are not more than 3 million. It doesn't matter if this is within 6 months or this is within 18 months. This you cannot proportionate. 50 million, this is a requirement of the law. You need to go for the audited financial statement. It doesn't matter for which period. This is applicable on the tax period. In the same way, you need to maintain the master file and local file. We know that if the companies are part of the M&E group and their group level revenue is going more than around 3.15 billion and the individual entity revenue is more than 200 million, then they need to go for need to maintain the master file and local file. This amount cannot be taken on pro rata basis. Cash basis of accounting is possible if the company has revenue up to 3 million. You can apply the cash basis of accounting. This is again based upon the tax period. You cannot apply the pro rata basis. In the same way, if your revenue is in between 3 million to 50 million during the tax period, and if this is between 3 to 50 million during the tax period, you can apply the IFRS for SMEs. And it doesn't matter your tax period is 6 months or 18 months, you need to take 50 million in between 3 to 50 million. This is for the tax period. This is not based upon you can't take it on pro rata basis. De minimis requirement, law says de minimis requirement, your non-qualifying income should not be more than 5% of your total income. But some income that are subject to straightforward 9%, that is not part of the income while applying this threshold. What are those income? Four categories are there. Income generated from the domestic P, income generated from the foreign P, income generated from the real estate except one stream of real estate, and income generated from the non-qualifying intellectual property or some portion of the qualifying intellectual property. Means these are the four categories which will be straightforward subject to tax at 9%. These four categories will not be considered while applying the de minimis criteria. De minimis criteria, your non-qualifying income should not be more than 5% of your total income. This 5% cannot be pro rata. One pro rata possibility is there. This is the interest. We know this. If the interest is less than 12 million, you can claim 100% of the interest. Then if your tax period is 6 months, then threshold is 6 months. You can claim maximum. If your interest is less than 6 million, you can claim 100%. Otherwise, you cannot claim. If your tax period is 9 months, then if your interest is less than 9 million, you can claim 100%. Otherwise, you cannot claim. Means this interest, you can take it on pro rata basis. Rest of the all numbers as mentioned above, you cannot take it on pro rata basis. So what we have discussed, coming back to the public clarification number 3. They said public clarification number 3 deals with 3 things. What are those 3 things? A resident person incorporated in the UAE, which is subject to commercial company law. This we have discussed. Now we are going to discuss PE of the non-resident person. Then we'll be discussing juridical person incorporated of the UAE. So let's go and discuss PE of the non-resident person in the UAE. Okay, by the way, what based upon this understanding, this is a summary of the public clarification number 3. You can go through this. You can go this. If this is registered prior to this, after this. If prior to this, whenever their period is coming to an end, next period will be subsequent tax period. And first tax period, can be less than, it can be more than, in between 6 to 18 months. You can go through this. Like just let me say, if this is, okay, take this one. If the first tax period is 1st of July 2023 till 30th June 2024, means the tax period is starting from 1st of July 2023 because their previous period would have been ending on 30th of June 2023. Fresh period will be starting from 1st of July, 1st of July onward 30th of June. Okay, if this is the case for this, the first tax period, the company Jan to December, the December will be ended on 31st of December 2023. 2023, and fresh period will be started 1st of June 2024. You can go through this. If the company is incorporated on or after 1st of June 2023, this can be always 12 months. This can be always 12 months. This is the possibility it will be less than 12 months or more than 12 months. This will always be 12 months, most of the cases. So you can say if the company was incorporated from 1st of June, then 1st of June till 31st December, it will be first tax period. Company was incorporated on 16th of August, it cannot be big. If the company was incorporated 16th of August, now if the company, this is important, if the company is incorporated on 16th of August 2023, they cannot keep 31st December as their first financial period because the period is less than 12 months. They are taking the financial for the 18 months. So they will be taking up to 31st December 2024. And the same will be tax period. So in these cases, as we see in there, tax period can be less than 12 months, more than 12 months. The rest of the three cases, it will always be most of the cases 12 months. You can go through the examples given in the public clarification number 3. PE of the non-resident person. Second point, it has been given a public clarification number 3. PE of the non-resident person. What the basically public clarification says. Tax period will be the financial year or part thereof beginning or when the PE first begin operations. Again, there no change, by the way, very honestly. If the PE was already existing in the market before the effective date of the law, or PE was established after the effective date of the law, the treatment is same, like a company which are subject to commercial company law, resident juridical person, the same treatment. There no difference, by the way. Only one important thing is that they have given in the public clarification, we need to perform the existing test as well. What is that existing test? Existence test shows from which date this PE exists. From which date we will assume that this PE exists. This is the existence test. Rest, this tax period test is same, like resident juridical person. Existence test is important. And while applying the existence test, once we are making sure that the PE exists, then time period will be same to calculate the taxable income. This is just to perform the test PE exists or PE doesn't exist. If PE exists, then we'll apply the same treatment to calculate the taxable income tax period like a resident juridical person. The existence test, PE started operation on or after 1st of June 2023. Means PE started operation in the UAE. A PE was set up in the UAE. A PE started operation in the UAE on or after the effective date of the law, which is 1st of June 2023. Or you can say from the on or after 1st of June 2023. Then it depends. PE can be set up in the form of fixed establishment or dependent agent. If the PE has been set up through the fixed establishment, then it has been given in the public clarification, end of the 6 months from the start of the operation. Means the time this fixed establishment was set up, from that date onward 6 months. It will be treated a performance period. After the end of the 6 months, on the first day, it will be treated. We need to check PE exists or not. If PE exists, then we need to apply this criteria to assess the tax period and to calculate the taxable income. If this PE is established through the dependent agent, so the law says immediately on the date of incorporation, basically it should not be date of incorporation, on the date immediately this person start working exclusively for the non-resident person, that date will be considered that the PE exists. In the same way, existence test started operation before 1st of June 2023. Fixed establishment, 6 months from 1st of June 2023 onwards, it will be considered performance period, and 1st of June to 1st of December 2023, we need to perform the test. We need to check PE exists or not. If PE exists, then we'll say yes, PE exists. Then we need to go and apply this criteria to calculate the tax period and to assess the taxable income. In case of dependent agent, they said immediately on the effective date of the law, if someone is working exclusively for the non-resident person, negotiating contract, concluding contract, or almost finalizing the contract which are signed by a non-resident person, then a dependent agent is there, and the time this dependent agent, it will be considered from the effective date 1st of June 2023. So For the P, as I mentioned, there are no difference. There are no difference in between the tax period treatment. There are no difference in between the tax treatment. The only important thing, we need to perform the existence test. P exists or not. If it exists, then we need to go and apply the second test tax period, and we need to apply the taxable income, calculate the taxable income tax return, all those things as usual that we are doing. Poem, place of effective management. Poem stand for, I think we have already discussed, poem, place of effective management. Companies is out of the UAE. This is a juridical person, but this is a place of effective management in the UAE. The company is being controlled and managed from the UAE. Then it has been given in the public clarification. The first tax period will be the financial year or part thereof commencing on or after 1st of June 2023. So this is important. For the previous period, we are not discussing anything. The first tax period will be on or after 1st of June 2023. Nothing, because what is the reason for this? If this is one company in UAE, that company, sorry, if one person is based in the UAE and the person has a company in UK, this company was being controlled and managed from the UAE before the effective date of the law. If this company was being controlled and managed from the UAE before the effective date of the law and there was no corporate tax in the UAE, so we had nothing to do with this. They mentioned very straightforward. The straightforward case is basically they are asking first tax period starting on or after 1st of June 2023. It doesn't matter, because it doesn't matter when this company was established out of the UAE. So first tax period starting on, if it's a fresh company, the first tax period will be started when the company was established after 1st of June 2023. If this is a previous company, then again, once the previous period will be ended, new period will be started, it will be 1st of June. The treatment is same, there's no difference as such, but we're discussing if you're going back on this slide, as I mentioned here in this slide, you can look into this. Even the company was set up earlier, even the setup company was set up later. Treatment is same. First day of the financial year starting on or after 1st of June 2023. They are asking the same thing here as well. First tax period will be financial year or part thereof commencing on or after 1st of June 2023. There are no change as such. So this slide, I'm coming back to the same slide again just for your convenience. Just look into this. This thing, and this thing. It has been covered in the public clarification number 3, public clarification number 3, and public clarification number 3. Natural person who conducts business in the UAE, it has been given in the law, their financial period will always be the Gregorian calendar year, and same will be tax period. This is not applicable. Any non-resident person who is sourcing income from the UAE, there will not be any tax period, because whenever the person is customer based in the UAE, the customer will be making payment to the non-resident person. They will be withholding the tax. So there's no requirement as such. If someone is generating any income from the UAE without any establishment in the UAE, so withholding tax, whenever they are making the payment, they will withhold the tax. Whenever this customer who is withholding the tax, they will be submitting the return, they will be, whatever the tax they have collected, they will be paying to the FTA. Next is in the UAE, it has been written in the guide, it will be same like basis like a resident person, exactly same like a resident person. So this is just for your clarification, it will give you more clarification, more understanding, more grip on the law. If you are reading, but you just always, I am always asking my colleagues, friends, wherever I am speaking, I'm always asking, this slide is very important. One, this slide, second, this slide. If you have a grip on these two slides, everything is linked with these two slides. This slide and this slide. You can have a very comprehensive understanding of the law, how the things are basically moving. Okay, one extension has been granted very recently. We know this, that what the law says. Law says taxable persons needs to submit the return within 9 months from the end of the relevant tax period, and they need to submit the payment as well. So now they were given extension. They have given extension by issuing a cabinet financial decision 7 of 2024. What is the extension? Now they said if the company was set up on or after 1st of June 2023. I will discuss once this company is being set up on or after 1st of June 2023, there is a possibility here the tax period is less than 6 months. Sorry, the tax period is, tax period, there is a possibility the tax period is less than 12 months. If the tax period is less than 12 months, then they're deciding when will be their financial year ending. If the company has been set up on 5th of June, might be they're closing their financial year 31st December, the tax period will be less than 12 months. So the return will be for a shorter period. Might be if the company has been set up, as I mentioned here in this case, if the company has been set up in August, their tax financial year will be ending on 31st December 2024. It will be even more than 12 months. Where there is a shorter tax period means the less than 12 months. If the less than 12 months is the period, if less than 12 months is the period, assuming the company has been set up after, okay, 5th of June. If the company has been set up on 5th of June and they are closing their books by 31st December 2023, their tax period will be almost same month. Within 9 months means by, if their financial period is ending on 31st of December and tax period is also ending on 31st of December, they are not changing the tax period. Then within 9 months means by 30th of September 2024, they need to submit the tax return. But this FTA, this decision has been issued by the FTA, decision number 7 of 2024. They said, if your financial year and if your tax period, if your tax period is ending on or before 29th of December 2023, if your tax period is ending on or before 29th of February 2024, then you can submit your return by end of 31st. You can submit under the application, you can submit the return. This is, they have given the extension here. So for the that shall be no longer than 31st December. Means the return, if your financial period is ending, assuming 31st December, as I mentioned, 31st December 2023, return was due by 30th September 2024, but now they are asking you can submit it by 31st December. They have given extension of October, November, December, 3 months. If your tax period was ending on 31st Jan 2024, return was due by the end of 31st October, they have given 2 months extension. If your tax period was ending by 29th of Feb 2024, as per the law, your return was due within 9 months from the end of 9 months. This is Feb till 9. By the end of November, they have given you 1 month extension. And they have given a public clarification number 4. They said this decision 7 of 2024 is only applicable for the company where their tax period or financial period is ending on or before 29th of Feb 2024. If your tax period is ending on or after 29th of Feb 2024, then the provisions of the law will be applicable. You will be liable to submit the return within 9 months from the end of the relevant tax period. So exception, this is extension has been granted. So if your return was due by 30th September, if your return was due by 31st October, if your return maximum due by 30th November, you can extend it and you can submit it by 31st December. And if your return is already due on 30th December, there no further extension, basically. This is the sealant period. This is, you can do it before that as well. So this is a FTA decision number 7 and public clarification number 4. Nothing other than this more important in these decisions. So if you have any questions, we are always here. We are always ready to listen you, ready to understand and ready to deliver. You are most welcome if you have any question. And if I'm going through quickly the decisions, this is a public clarification number 3. I think we have already discussed everything we have discussed except the deregistration. Intentionally, I have left it. I have not discussed the deregistration because the topic was today taxable person and tax period. I have not discussed the deregistration area specifically. The rest of the thing we have discussed out of this public clarification. Then this is FTA decision. They are discussed in the last slide. They have granted extension. Once they've granted extension, that you can submit the return by 31st December. And this is only applicable if your tax period is ending on or prior to 29th of Feb 2024. Nothing other than this. Then they issue public clarification number 4. In the public clarification number 4, they clearly said this is only applicable The decision will not apply to any taxable person whose tax period ends after 29th of Feb 2024. This line is important, rest everything is nothing as usual. So if you have any question, guys, you are most welcome. And this is over from my side. No question. Okay, guys, have a lovely evening and thank you very much for being with me. Thank you. Have a good day. Thank you. Bye bye.
Thanks for watching the video. Click on the bell and subscribe to the YouTube channel.